The stock market just keeps going higher and higher. We should have experienced a drop by now. Things can't just keep going up, can they? We might have just entered into a whole new market and everything in the United States might just be in a bubble. Conventional wisdom would say not to invest right now in the stock market or in real estate because things are at all-time highs, and so who wants to buy something at the top when it's probably gonna drop? Well, here is something scarier. What if you're the person holding cash off to the side, waiting for this big drop, and all the while, the dip never comes? What if you had a chance to get in the S&P 500 before 2024, around 4,500, but didn't get in because you were waiting for it to drop back to 4,000. Then it hit 5,000 in early 2024, and almost every analyst said not to invest because now that it hit an all-time high, it has to surely drop. Well, now at the end of 2024, it's hit 6,000. What if the drop never comes and you have to settle for these higher prices or risk being left behind? Brian Kim from Clear Value Tax has coined this idea, the Great Melt-Up, and it actually has a lot of merit. I want to give him credit because this is his idea and his research, and his hard work articulating this, so credit where credit's due. I'm going to show you a couple of short clips of his videos explaining this idea, and then I'm going to explain why you need to understand this as an investor and my take on what to do with this information moving forward. My name's Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified.
Inflation will reaccelerate, it will be vicious, and I want you to be prepared. The Great Melt-Up began on September 18th of 2024. So this is when the Federal Reserve pivoted to an easier monetary policy, which will reaccelerate inflation. So the Fed did this out of necessity to bail out the government's unsustainable debt situation. It does not solve the problem, but it does temporarily make the situation more manageable. Since the pandemic, we have been living through the everything bubble. So even with higher interest rates and quantitative tightening, elevated inflation persisted. With interest rate cuts and soon to follow quantitative easing, the situation will go from the everything bubble to the everything bubble on steroids, or as I have coined it, the Great Melt-Up. So the Great Melt-Up phase will be divided into two eras. So the first era will be the Great Melt-Up pre-crisis, and the second era will be the Great Melt-Up post-crisis. Now, during this pre-crisis era, which is what we're in right now, we will see inflation reaccelerate. So this pre-crisis era will end when the government and Federal Reserve manufacture a crisis to cut interest rates to zero and print a tremendous amount of money. So the crisis will usher in the second era of the Great Melt-Up, and we will see explosive inflation. Now, the second era of the Great Melt-Up will end when other countries and institutions lose faith in the dollar system.
So he's basically saying that yes, prices of things are going to get higher and higher, making the bubble bigger and bigger. Eventually though, that bubble needs to pop, and he's suggesting that the government is going to manufacture a crisis in order to manufacture this pop, but be able to control it. Watch this to understand the timeline better because it's kind of scary if you really think about it. And then after that, I'm going to tell you how we can get out ahead of this.
So this will leave the US government and Federal Reserve no choice but to attempt austerity and deflation, which will trigger an economic collapse. So when the collapse becomes unbearable, the government and central bankers will have no choice but to enter a new era of US hyperinflation. So of course, hyperinflation will bring the demise of the dollar system, and then we will enter the next stage, the Great Reboot. It will be the birth of a new financial system and a political revolution. But in today's video, we need to focus on how to capitalize on the situation during the Great Melt-Up. So the melt-up stage will last for many years in total. So at a minimum, for the duration of this decade. Inflation will reaccelerate, it will be vicious, and I want you to be prepared.
So he's saying that the melt-up stage is going to last for many years, probably till the end of this decade. So before all the craziness and doom and gloom, we're gonna see a bunch of years of really favorable time in the market. With this accelerated growth is also gonna be accelerated inflation, so that's something very much to keep in mind. I just know for a fact that there's a lot of you with cash off to the side waiting for this dip to happen, and a substantial dip is what you're looking for. So I just want you to be careful. I do private financial coaching where I meet one-on-one with a client and we discuss their portfolio and risk and how to optimize specifically for what I see happening in the next year to 5 years. And I've been seeing it way too often that people are holding way too much cash right now, especially for the environment that we're about to see. Side note, if you'd like to get a one-on-one with me from the convenience of your house because we meet over Zoom, just email me at ProfessorG.invest@gmail.com and let's get you set up for success, especially going into 2025. But many people are saying, man, these prices are crazy, or this stock is at this all-time high, or this ETF is way too high. I'll just wait for this thing to crash. Well, it's not guaranteed to crash, and this very well might be the bottom, which is hard for us to understand, especially since we're literally at the top from what we've seen. After watching this short clip and thinking about what we just witnessed over the last 4 years with COVID, you may start to rethink everything.
That the price of homes, stocks, Bitcoin, gold, silver, they're so high, I'll just wait in cash and hope for a crash. So that is logical thinking when the government and Federal Reserve do not interfere with the markets. However, the politicians and central bankers have hijacked the markets since the great financial crisis of 2008. So the financial system and the markets are now completely rigged. Inflation will accelerate and asset prices will continue exploding to new record highs. So we are in the great melt up and you are witnessing this with your own eyes. Asset prices, they're not going to go up in a straight line. There will be bumps along the way, but they'll just keep going higher.
In other videos, he explains how the government and Federal Reserve are just not gonna let a crash stay for very long, and I definitely agree with this. They're gonna artificially inflate the markets by providing some type of stimulus for either companies or individuals, basically how we've been seeing how they dealt with the whole COVID situation. But what he said there was absolutely true. Asset prices won't go up in a straight line. They're gonna go up some, then down a little, then a bit up, then down. There'll be minor pullbacks, but sitting out and hoping for a huge crash might not be the smartest possible way to go about this. If things do go as he says, and as it's kind of looking like, then inflation is just gonna keep getting worse and worse. The fact that the Fed is deciding to bring down the rates at this point, when we just barely got inflation back into control, doesn't seem to really make sense. Inflation was being lowered by keeping the rates high, so bringing down the rates is inevitably gonna be bringing inflation back up, and so things are going to grow faster, but again, the inflation is going to grow with it. So what's the only way that we can stay above inflation? It's not going to be by keeping cash and just sitting there and hoping things drop down. It's going to be by buying assets that appreciate in value. In my opinion, and in his opinion, there's basically 3 main places that you can be putting your money right now. First would be in the stock market with great stocks, but in my opinion, the best place is just solid ETFs with low fees that have a good track record. Specifically broad-based ETFs that touch many sectors so they mitigate risk and they grow sustainably. The next asset to own would be real estate. Whether it's your own family home or a rental property or two, I can only see this asset class getting more and more expensive, so the only way to keep up is to own. I know a lot of people waiting specifically for this one because they're waiting for those home prices to drop. Do you think that with the Fed rate coming down, meaning that mortgage rates are going to be dropping a bit as well, do you think that's going to bring home prices down, or are they going to go up? I believe that house prices are just going to continue to rise and only rise higher once that mortgage rate is lower. And then eventually when inflation gets higher, and then when the Fed rate goes back up, and then mortgage rates go back up, now you have a higher priced house and a high rate. It's just gonna get worse. The last place to be putting that money would be in something that is like a storage of value, but that rises and tries to outpace inflation. And even better would be appreciating. So this would be like gold and silver or Bitcoin or all 3. There's a case for all three, but I won't get into that debate here. The main thing is to hold assets that appreciate in value. Keeping your money in cash or in just the dollar in your bank account is one of the weakest things you can do. Prices of gas and groceries and insurance have all risen like crazy just in the last 3 to 5 years. What used to cost $20 5 years ago costs $50 now. The dollar's worth less and less each year and will continue that way, so holding your money in the bank to get eaten by inflation is terrible. Now, quick disclaimer, not all of your money should be tied up in assets because there are times that you need money, something like an emergency happens, or you need a quick $1,000 or $5,000 for something. You don't want to have to sell out of an asset to be able to have that money. So I do think that there is merit in holding a percentage of your money or a small piece of your money in cash, but at least holding it in a high yield savings account or a money market account, something that is growing or accruing interest somewhere close to inflation or at least beating inflation by a bit. If you have a good stable job and you have low to no debt, having 3 to 6 months worth of living expenses in a high yield savings account is perfect. If you're going to be retiring soon or have high medical deductibles or medical conditions that you need probably a little bit more cash on hand, I would suggest having 1 to 2 years worth of living expenses in that high yield savings account for emergencies. Most of your money should be working for you in assets that appreciate. That's how the rich have gotten richer, and that's how the rich will continue to get rich. Buy assets and live below your means. That's the secret. To find out what exactly to invest in and what the most simple 3-fund portfolio on the planet is, check out this video here, or watch this one to keep you going strong because I just made this video earlier this week and I know you're gonna love it.